All right, traders. Happy Thursday to you. How's everyone doing today? Thursday that feels like a Friday. I am beat. I am beat. But luckily, it's my last trading day of the week. I'm not too active on Fridays, especially as the teaching stuff goes. So we can get ready to head into the weekend. I think it's another thing as well. I went on the chat this morning and made a big mistake, guys. So Andrew was on there. He said, Akil, do you have time for a quick question? And if you know Andrew, you know there's no such thing as a quick question. But I'm like, sure, I have time to look at a quick chart. And then came the Andrew question, a question about trailing stops and active trade management with high momentum candles and rules for measuring moves. And it hit me first thing when I wake up. My brain wasn't ready for it. So it's like hopping right out of bed and going into a workout, man. So that didn't make life any better. But the good news is we're going to have something really cool to talk about in Monday's Q&A. So we're going to talk about Andrew's question about high momentum breakouts and active trade management for that in Monday's Q&A. And then we're also going to follow up on the question that we ended with yesterday with Duncan with the inside bar false breakout. So Monday is going to be a very fun session. So, by the way, welcome to you guys watching over on YouTube and TradingView as well. I'm not ignoring you. I'm just still not used to the multi-streaming thing for the first session or whatnot. So I want to start off today with a few things. As you know, we're not just hopping into the charts. I like to give you guys kind of rant and stuff that's on my mind. I want to start off with a quote that I shared this morning over on social media. If you don't follow me, go over there and do it at Akil Stokes RTM. Just watch for the scammers. Someone got scammed yesterday, unfortunately. They didn't get scammed, but they were close to. I like this quote because it goes hand in hand with a lot of conversations I've been having lately. As you know, in the new year, everyone's excited about trading. And it says, age isn't always a good measure of wisdom. Yes, some people grow wiser as they grow older, but others simply grow more stubborn and set in their ways. And I was wondering what you guys thought about that. Are age and wisdom necessarily correlated all the time? So the older you are, the wiser you are? Or is there something else that goes into that equation? By the way, today's trade of the day is going to be on the euro dollar, right? We watched that yesterday during the CPI breakout. And we've got potentially two secondary opportunities on that today. So it'll be fun. But yeah, age and wisdom aren't necessary. Peter says, I keep telling father-in-law this. Well, no, father-in-law, you just, you tell him whatever he wants to hear, Peter. Don't think you're safe just because you made it in. You're never safe with the father-in-law. Hey, guys. But I like this quote because I think I deal with a lot of people, or I see a lot of people, I'm sure you guys do too, that think they deserve success just because they've been doing something for a while. So you get the people like, oh, I've been trading for 10 years, so I automatically know this and that. And it's not true, right? Just because you've been trading for 10 years doesn't mean you're more successful or doesn't mean you're wiser than someone who's been trading for 2 years. Right? And we see so many traders that get caught up in that because they don't want to have discussions with those type of people, right? Your wiseness is associated to your experience. Your experience isn't based necessarily on your age, but it's based off the time that you've worked on gaining that experience. Does that make sense? So like age could have something to do with it, right? So if me and Push, if we were both investing 20 hours a week in the market, and I've been doing it for 1 year and Push has been doing it for 10 years, Push is going to have more experience than me, right? 10 times 20 versus 1 times 20. But let's say that I'm investing 20 hours in the market for a year. Push has invested 20 hours a week in the market for a year. Push has invested 1 hour a week in the market for 2 years. Is Push going to have more experience than me just because of the 2-year mark versus the 1-year mark? No, I'm going to have more experience because of the hours. So experience isn't just based on time and age or age. It's based on time invested in whatever you're doing. I think I have a podcast, if it didn't come out already, coming out on that as well. So I like this topic because, again, we're dealing at a time here where a lot of newer traders, yeah, quality over quantity, they sometimes feel discouraged when dealing, and discouraged, afraid to comment or respond or ask questions to a trader that has been doing it for longer, even, or call that trader out if there's something wrong. I don't mean call out in a negative way, but like say, hey, you kind of messed up here. You need to have that confidence that experience and wisdom isn't just gained by sitting there and doing nothing. You have to earn it with time, and you can easily spend 5 years as a quote unquote trader and gain zero experience if you're doing the wrong things. Or even worse, like at the end of the statement, if you're doing the wrong things, you can grow more stubborn in doing those wrong things, and then and we can associate wrong things with like trading mistakes, and then you're pretty much screwed. So moral of the story is push is old. That's what I'm saying. That was my yeah, you're old. Sorry. So what happened to the charts today? First and foremost, let's check out the economic calendar. Yesterday, we got a big bang out of the CPI, right? We watched it live here in the live room. It actually happened right during our first break. And we were like, oh no, check your charts, watch your stops. It's happening. So today we're going to kind of deal with the aftermath of that. We also talked about a little bit of the rookie traders' mistakes that happened during news announcements. And we'll get to see kind of the follow-up on that today. We do have PPI coming out at 8:30. An interesting one is going to be at 10 a.m. FOMC member Brainard is testifying. She's going for the new Fed chair role. So the market should be paying attention to this, because anytime there's a potential change in leadership and potential change in policy, that's going to be the big gear in the middle that turns everything else. So pay attention to that. At 10 o'clock, we'll be out of the live room by then, but just on your personal radar. And tomorrow, I'm not going to see you guys tomorrow, but we got some ECB stuff tomorrow in the morning as well. So let's get started with the euro dollar and euro dollar, right? I think Raymond said this yesterday. Finally, we've been out of the muck, right? So if you're asking yourself, what is the muck? It is a technical term that we invented over here at Tier 1 Trading, which means the blah, the meh, right? The nothing, right? The muck, right? There were some pattern formations or some potential pattern formations in here. By the way, I did lose on Aussie dollar. First loss of the year. Can I get a clap for that? I'm no longer undefeated. I was 3-0 to start the year, and now I'm a loser, guys. I'm going to bail on my system. I'm going to bail on my system, and as soon as we're done here in the live room, I'm going to search the internet and find the next thing that's going to make me money. But this was the muck, a period of consolidation, a period of unstructured consolidation, right? There are structured consolidation where it's like channels and stuff like that, where the market is moving harmonically just in a tight range. There's unstructured consolidation where the market is just kind of just floating and waiting. And this would be an example of floating, waiting. Real quick, Billy over on YouTube says, but was it a good trade? Man, someone's been listening to Akil. It was a good trade. Yep. It was a good trade. So I'm not mad at it at all. I love asking that question to people. I spoke to a guy the other day who was like, yeah, did this and that, and blah, 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 blah. And I'm like, well, was it a good trade? He's like, well, I just felt like it was time to take it. Was it a good trade? Well, I just, it was, no, it wasn't, Akil. Real quick, another question from Gilbert says, from your perspective, is it better to trade fewer pairs or trade fewer patterns? So fewer trades, fewer pairs, or fewer strategies? Real quick, before we dig into the euro dollar, live room members, what would you say to that question? Is it better to trade, from your perspective, is it better to trade fewer pairs or fewer strategies? I'm still here, just doing nose blowing stuff and stuff you don't need to hear in the background. So our live rumors are saying, depends on what you've tested. Spoken like a true coach. Percy says fewer strategies. Jagger says fewer strategies at first. Orsi says fewer strategies. Chris says fewer strategies. I'm gonna say, yeah. So there is a balance that you can have, right? And I'm sure there's a formula you can actually use to calculate how much you're looking at, right? Between trading view as well says fewer strategies. Yeah. Between strategies and pairs, right? Now we can look at this from a few different perspectives. So if you are a newer trader, I think we can all agree. If you are a newer trader, is it better to start off with one strategy or 15 strategies? If you are a brand new trader, fresh off the bus, is it better to start with one strategy or 15 strategies? I think we'd all agree one strategy, right? My philosophy and my mentor taught me this. Start with one strategy. And this is how I progressed in my trading career. You start with one strategy, you do all the stuff and learning and backtesting and all that fun stuff, right? You master that strategy, and then here's the secret, right? This is like the key of investment, right? If you ever read the book The Richest Man in Babylon, there is a great line, and this is before cancel culture. He'd probably get canceled today, but he said, "Make your money your slave," right? And that's not in any type of negative connotation or anything like that, but it means that your money should work for you, right? That's the whole thing of investing, right? Investing is putting your money in a position where it works for you, where it can make money when you're not working. You literally make money in your sleep, right? That is the definition of investing, right? It's a shame we have to be sensitive with stuff like that these days. I mean, obviously I can get away with saying it, but I can imagine someone getting yelled at for saying, "Oh, slave," and making it racist. And it's not racist at all, but 2021, 2022, everything becomes offensive, right? But make your money your slave. So you can think of your strategy as the same way, right? And this is how I progressed in my trading career. I started, well, after the horrible bad periods, right? The dark ages of Akil trading. This is when I first got on the right track. I started with a single strategy. Once I was good and comfortable, proficient with that strategy, once it started making money, and your experienced traders will tell you this, you essentially start running on autopilot. Am I correct in saying that, guys? Like once you're in that zone, it's like it's boring. It's like, looking, here it goes, there's setup, order. Okay, what do I do now? And you're like twiddling your thumbs for like the rest of the day, right? So once you've mastered that strategy, once you become really efficient with trading it, right? It no longer takes the same amount of energy and time investment. So you have all this new open time. So what do you do with that open time? You can do whatever the hell you want, right? Time freedom. But for many of us, we start digging into the next thing. So if Raymond is trading patterns, once he's mastered patterns, he's like, okay, well, master patterns, I can identify them, order set, boom. What do I do now? All right, well, let me start learning about trend continuation trading. So then he uses that free time to learn about trend continuation trading, learn strategy development, back testing, and then add another one. So I would advise doing that. Start with one strategy and then slowly build your strategies from there. Now, as a brand new trader, now going back to the original question, is it better to trade more strategies, more pairs? It doesn't really matter. I do think I do believe in diversification in the markets, just from my personal experience, that I think you should. I think you're going to be better suited to have long-term success if you have different ways to attack different market conditions. I wouldn't have said this when I first started trading, but being in the game for 15 years, I've learned that lesson, that market conditions do change and you do need different ways to attack it. But you want to find that balance. And this is the balance I would say, right? So if you're only trading one strategy, you can afford to trade that one strategy on 15 different pairs. So many of you guys know Darren. Maybe if you're watching on TradingView or YouTube, you don't. So Darren, good friend of mine, one of the co-founders of Tier 1 Trading here. He is the one that invented the cipher pattern. Not invented. He discovered the cipher pattern. And he would get offended if I said invented, because he didn't invent it. People that say they invented harmonic patterns or anything, it's dumb, right? It was there, right? So he founded the cipher pattern, right? So because Darren's ego is insanely big, he said, I'm only going to trade the cipher pattern and nothing else because this is my baby. So because he only traded one thing, what he did was he looked for it across a 20 pair portfolio. So he was looking at one thing across 20 pairs, right? So you can definitely do that with your strategy. You can take one strategy and then open up the amount of pairs that you watch it on. If you're going to trade more, and on the other hand, we have another trader, Stuart, who only trades the pound dollar, right? So he trades one pair, but he's got about 3, 4, 5 different ways to trade that one pair, right? So you guys see the theme there, right? If you're trading one thing, you can do it on more. If you're trading more strategies, you should look to do it on less. And then, of course, there's that middle ground where you can trade like, hey, a couple strategies on this many pairs. Does that make sense? I forgot who asked. I think it was Gilbert. Does that make sense, Gilbert? As always, we take the very long way to get to your question. But the story getting there is the most important part. Another question said, where do you start though? How do you find interesting pairs, trading view screener? No, you start with learning how to trade. You start with learning how to trade. You start with finding a strategy. You start with finding or developing a strategy, whatever you want to do, refining it, back testing it. Once you back test it, you'll see exactly what pairs work the best, right? You'll have a handful of information and data. That data will tell you what pairs are the best, what pairs are okay, what pairs are crap. And then you develop a trading portfolio from those pairs. So it's not about, you don't use a screener or anything like that. You look at the hard figures, the data, which will tell you which pairs, which markets historically work best with your trading style. And then, of course, you develop that portfolio. You take risk into account if you want to take correlations, all that fun stuff. But you have a constant and consistent portfolio of pairs and markets that you're looking at each day. And then the only screener you're doing is a kind of a personal screener. You're screening by doing analysis with your eyes and looking for your opportunities. So if you're trading less strategies, you can trade more pairs. If you're trading more strategies, you should trade less pairs. Or you can be like me. I trade a handful of different, I don't like calling them strategy, but techniques, but I'd only do so on a 9-pair portfolio. So it's that middle comfortable ground for me. Good question. So euro dollar, going back to the muck, right? We broke out of the muck yesterday. And live rumors, do you remember where our prediction was? We had a few of them here, right? We identified the higher high, higher close, the break and close above the muck. We then predicted if we get a higher high, higher close, then we're likely to continue higher. Our next prediction was if we're likely to continue higher, then where are we likely to continue higher to? What levels would you say? Good question this morning, right? Hats off. And you guys in the live room were saying that these people watching the streaming suck and they shouldn't be given the time to ask questions. Remember that? You were talking about them for like an hour, just tearing them before the... Just kidding. Jagger says 1520s. Let's put a little line. I might have to zoom in a little bit. Line right there. I'm going to be in the area. 1520s. So structure lows right there. Again, if we're measuring our ebbs and flows in the market. One of the cool things about learning this insignificant skill, I say that with sarcasm because many traders, this is one of the first things we teach in our courses, and many traders are like, oh, I don't want to do this, Akil, just teach me the strategy. Not to realize that this comes in handy for everything else you're doing. So our new structure low right here, our previous new structure low. Raymond says 1515s, 115s to 115.15ish. So looking at the even handle right below that level. Quentin says 115.11, same area. Orsi says 115s. Jagger says 115.20. Yeah. So this zone right here, right? The zone between our previous new structure low and our previous outside return. If you want to shift that down a little bit to the 115 handle, the psychological number, that's fine as well. So you can look at this and you can say that, hey, we still have some room to go higher. May not be a massive amount of room, right? Maybe if you're a swing trader, not interested, but we go down to the lower time frames, there's still room to go higher. So what we've done here, obviously on the higher time frame, is we've built our premise for what we're looking at, right? So now we go down to the lower time frame. And what I mean by is there room to go higher? It could be in different ways, right? There's room to go higher literally from where we're at right now. There's room to go higher if we were to get a retracement as well. So let's go down to the 4-hour. We're going to get a clearer view. Again, here's our CPI breakout from yesterday. Oop, if my thing works. There we go. I think we're about to have the cameo from my kid. Here's our little consolidation period. You guys remember this? This is the calm after the storm. So price breaks out on CPI, and then people get bored, and it's like, and then the market kind of makes up its mind after it digests everything and pushes higher. Now, if you remember this, we were watching this on, if I can bring it up here, on the range bar chart, right? Remember we talked about morphing patterns? I just thought this was a cool example here. Maybe mine. Oh yeah, note you're still here, right? So we talked about morphing patterns here. And we had the situation where we talked about, hey, you could look at this as a double top. Now, the question you want to ask yourself is this a double top? It is a double top, but is it a double top that comes at a level of any relevance? And the answer was no. Now, we did get a small break and close below. Again, range bars are going to give you some weird stuff right here. But eventually, what do? We broke up. Previous resistance turned to what? Support. And then ran on our way. So you can pick up on those little pregnant pauses here on the range bar chart that you may not be able to get to on, let's say, a minute-based chart. So we had that pregnant pause. We pushed higher. We're putting in a bearish move right now. There are two things you can look at here. Let me know where you guys want to start. You want to start at the counter trend opportunity or the continuation opportunity? Which one first? Jagger says, I was thinking counter. All right. So give me some ideas. If you're looking to be a counter trend trader, so someone that's looking to get short, what would you be looking for? Let's get that brain going. Early on a Thursday morning for some of us. Really early for Raymond on a Thursday morning. Somewhat early for me. Afternoon for you guys in the UK. I think all of our Aussies are fast asleep right now. Most of them. What are we thinking? I saw something. The cue might be how to pick pairs to test. Test them all. Test them all. You'll never know if a pair is profitable or not until you test it. So test them all. There's no magic system in picking pairs. You can put them on the wall and throw darts at them if you want to pick the order in which you test, but test them all. Now, eventually, you'll get to a point where you can kind of prioritize which ones you test in which order, because you'll start to know the pairs better, and you'll know that, like, Aussie Canada, if I'm a trend continuation trader, I don't really want any parts of that, right? So you'll know kind of which pairs tend to do well with what type of strategy you're doing. But at the beginning, just pick them all. Pick them all, run through the data, right? Many people are going to complain about saying, oh, it's going to take a long time. You're gaining experience, right? Did you listen to the first part of today's session? You're gaining experience. Live rumors, just to kind of get off track a little bit. Is there any better way to gain experience than backtesting? Not just experience in what your strategy will do, but experience in training your eyes, your reticular activating system, right? There's no way, right? What better way to gain experience and knowledge and data than to go through thousands and thousands of trading opportunities? I mean, you can maybe plug yourself in like the Matrix if you got that type of deal going on, but that's about it. So I don't dread back testing. I'm not like, oh man, so many pairs to do. I mean, don't get me wrong. It's not all rainbows and unicorns. There's a time where it sucks. But you look at the bigger picture, you know what you're going to get from it. Even if its strategy doesn't work. Even if your strategy doesn't work. Real quick, TradingView says, wouldn't that be close to RSI divergence though? Short, this could be the end of the fifth wave too. Yeah, we do have RSI divergence. Yep. So if we look at RSI divergence, for you guys that are familiar, it's when our indicator or oscillator, or divergence, I should say, is doing the opposite of price action. So we've got RSI putting in lower highs here. You've got price action putting in higher highs, right? That is a clue of a potential reversal or relief. Man, I don't like using the word reversal, or potential relief. Now, as far as the fifth wave goes, I'm not an Elliott wave fan. I understand the principles of Elliott wave and how price moves. I think the thing with Elliott wave is choosing the first wave. I'm not really a big fan of that because you'll get get a bunch of Elliott wave traders in the same room and they'll give you 15 different waves. But yeah, if you're looking at typically if you're doing Elliott waves, you're looking at the longest wave being that middle wave. So you'd have boom, 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 and then you'd see either that reversal or you see that complex pullback. So it doesn't necessarily mean full reversal. It just may be that AB equals CD as price takes a little bit of relief before a continuation, right? So the thing is, we're never going to know, but our job as traders is going to be predictive in our analysis, and that's what we're doing right now. We're setting up our opportunities and then reactive in our execution. So going back to the counter trend, right? Someone said double top. Yes, we're not going to have a double top here. Well, we could. I would say even if we had a double top with this little move, it wouldn't be a positive one because we've already retraced to the previous level of structure. But something that we could have is this, right? So the most important level for us to give us a clue that price is getting ready to reverse in a bigger way would be a violation of this level. Would you guys agree? We have our small range here. We have our high momentum breakout candle, right? This would be the area in which we want to see violated. So again, just like yesterday with dollar Canada, obviously if we just straight violate this level, right, that's a positive sign for counter trend trading, right? Lower low, lower close, prediction that price is likely to go lower. Obviously you can trade on the breakout. You can wait for the pullback. You know, that's going to be a personal tactic decision, right? But the key is going to be a violation of this level. We may also, that violation may come in the form of a head and shoulders pattern, right? Maybe the market's going to move with symmetry and we get the same type of kind of tight range on the side and then breaking out, right? That gives you a different opportunity. So if you're a counter trend trader, you're looking for a violation of this level. So counter trend trader means someone that's looking to take it short. If you're someone that's looking to take it long, you're waiting for a pullback and a hold of this level. So the cool thing is this, right? Because I always get questions about counter trend analysis versus trend continuation analysis and how do I analyze the market like a counter trend trader in this? And I always say this, right? Analysis is the same no matter what. And let me know if you guys agree with that, right? There's no such thing as counter trend analysis. There's no such thing as trend continuation analysis. Analysis is the act of analyzing a chart and making predictions, right? If you are looking for a counter trend trading opportunity, right, and you're looking for a trend continuation opportunity, you're essentially looking at the same thing or doing the same analysis. You're just looking to use it in different ways. So regardless, this is going to be our key level. And the major question that we're going to have is, how is price going to react when we get to that level? And the cool thing is this, right? Well, if you're someone that's trading both, I guess, it doesn't matter. You don't need to predict how price is going to react because we don't know. No one knows. If someone tells you they know, they're lying. We just need to wait for the clues. And that's when we use that if-then syntax, right? If price action violates that level, then blah, 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 blah. If price action holds at that level, then blah, 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 blah. And then we react accordingly after the market has given us that clue. Now, if you're someone looking short, again, previous structure, 113.80s, looks like. Decent level to go for. We already talked about level to the high side, 115 even, being a conservative one, all the way up to, what did I say here? To 115 13s if you're feeling super confident. The zone right before this consolidative level right here, maybe 115.90s, a little bit below 116 evens would be an aggressive level. So trading opportunity on euro dollar. I see one more question on, good question today, guys, for you guys watching on Trading View on YouTube. I see one more question on YouTube. We'll get to that before I kick you guys out. Before you do leave, do me a favor, hit that like button. Subscribe if you're not subscribed already. We're close to 50,000 subscribers on YouTube, guys. I think I checked this morning. I think it said 14,996. So someone out there create 6 more YouTube accounts and subscribe. I might just do that. Create some bots. I used to hate the word, or sorry, back testing is great. Basically tells you where to steer clear. It is your Bible. Justin says, used to hate the word back testing, and dived in this holiday, and man, it's a light bulb that came on. Thanks, Akil, for preaching the gospel and doing the work. Look at that. Look at that. It's pretty cool. We're slowly turning around this idea that back testing is horrible. I still don't understand why people. Well, I understand why people hate back testing because it takes work, right? But I don't get the argument of why not to do back testing. That's one of the things that just does not compute with me, right? Do you guys? Can you make an argument for it? Like, what's the negative? Like, is there any negative in having more information? Like, what's the? I don't get it. Like, I'm very understanding about a lot of things. That is one where it's like, I don't. You could never convince me that it's a bad idea. I don't get it. You can certainly make the case that it's not everything, and no, it's not everything, right? It doesn't predict the future, but it's like what like, and this is coming from a an entrepreneur and other aspects of life as well. Like what, like hit the clues we get from history are the best clues that we have. They're the only clues that we have. So like you have the option between some clues and no clues. Like why would you take no? But it's the it's the work and the time. That's what it is, Chris. It's the work and the time. No one wants to do the work or the time. It's like the whole thing where it's like, hey, I'll give you $100 now, or if you work blah 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 for the next year, I'll give you 100,000, right? And I'm guaranteed there are people that are like, I'll just just give me that 100 now. No, we don't look long term. Zavi over on TradingView says maybe I'll wait for longs. Maybe I'll wait for longs around 1375. Looking at a retest of the lows here. Yep, the same area that counter trend traders will be looking for shorts. That's going to be right back in our bigger trend continuation trade for longs. Yep. So the target area for a counter trend trader, and again, remember, counter trend traders are short term. Right? You're not predicting a super reversal or anything like that. You're predicting a move to our previous level of structure, and then right again, it becomes another trend continuation opportunity, and the cycle repeats. But anyway, thanks for joining, guys that are on the live stream. Again, do me a favor, if you're not subscribed already to the YouTube channel, do that. Trying to get to 50,000 because it's a cool number. I don't think it has any other relevance, but sounds cool. I can brag about it. And I'll see you this weekend for a weekend video. Hit that like button on the way out. If you have any comments or questions, leave it. I do respond. Live rumors